Welcome back, everyone. So after recapping 2020, today's video is going to be looking forward to 2021. So what might happen in the next 12 months? What am I watching for? And what will be different next year than this year? So events that happen early in 2021, there are two that are, well, substantial, and they shouldn't be a surprise to anyone because they've been known for a while. And normally in markets, you'd expect things like that to get priced in. In this case, however, I will let you be the judge of if it's priced in or not. So the first thing is the shutdown of the Ranger mine in Australia. So this mine used to produce more, but now it produces about 4 million pounds a year, which in uranium terms is not huge, but it's not nothing by any stretch of the imagination. The next thing is the shutdown of Cominac, another mine, about 3 million pounds a year. So together that amounts to about 5% of the global uranium primary production. And for a commodity, normally if you said 5% of the supply is going to come offline, that would usually cause a substantial move. In uranium, however, for a number of reasons, it's more nuanced. Long-term contracts, inventory, this, that, and the other thing. But still, it should be pretty big. That said, to quantify how big it is, if you're looking at the replacement cost to get that many pounds online, I would say it conservatively would cost probably 400 to 500 million US dollars. And I mean, that's close to 5% of the current equity in the sector. I mean, just in terms of looking at the scale. But the point is, there's very little, well, aside from a few private companies on long-term planned production that's already going on, there's no public companies that are really spending that kind of money or anything close right now. They're more close to cutting back production mostly than starting new ones. The other thing is, and this is kind of a tack on because we don't really know, Ukraine, the mines in Ukraine shut down, and that amounts to 2 to 3 million pounds. We don't know if that's going to come back, what that would take. It was kind of unplanned, but and it's smaller than the other two, but it could be, I mean, a decent sized difference because again, let's say you needed a mine that would produce that. It's probably going to cost upwards of $200 million to get that mine built. But one of the things that was not necessarily planned for years in advance and was kind of a very 2020 thing that is going to be continuing into 2021, and that is both Kazatomprom and Cameco. The disruptions that they've had this year, the unplanned disruptions, are both likely to be dragging into next year to some extent. Now, Kazatomprom, that's because of the way their process works. ISR, the delays in what they're picking out of the well field is 4 to 9 months. So 9 months takes us to approximately May next year. Whereas Cameco, well, they shut down Cigar Lake again. It'll come back, but the debate there, as I've covered prior, is that 1 more month? Is it 1 more week? Or is it much longer than that? And the implications of an 18 million pound per year mine being shut down is substantial because that's, I feel like it's a 1.5 million pounds a month approximately, but it works out a bit differently because of maintenance and stuff like that. But the impact of these is, again, more complicated than just that because neither of these were selling into the spot market before. So it's not like you're subtracting supply from the spot market, but now that they are not producing those pounds, they'll need to source them from somewhere, and one of the, if not the main source for where those pounds that were priorly believed to be produced and then sold, those pounds are going to be coming, some of them, out of the spot market. So that is further reducing the availability of material. So the main driver of growth in the nuclear industry is probably going to be the East, particularly China. Now, there was some research recently that pointed to if China wanted to go net carbon neutral by 2060, which is what many have been saying that they want to do, that would mean that they would need about 620 megawatts of nuclear. I'm unclear if that's that many more or that many total. So if it's that many total, even that would amount to 550 megawatts of growth over the next 40 years. So this is something that, I wouldn't really want to say, let's ignore the strategic inventory and initial core, because this comes out to a substantial number of pounds. In fact, when you account for the strategic inventory and initial core, because new reactors need more fuel when they're starting up. So if you ignore those one-time bonuses, which, by the way, amount to 2.7 billion pounds, ignoring that, that would mean 6.875 million pounds of growth, demand growth, per year, which would amount to between 10 to 12 reactors. Now, this is pure speculation, because the official plan is 6 to 8 reactors. But if we get to that point, again, pure speculation, will it happen? Who knows? Then they'll probably need more or substantially bigger reactors. So will all of this come in 2021? Not a chance. Will some of it? A little bit. Do we get 6? Do we get 8? Do we get 7? That could easily happen. And, 6 reactors, or even 6 to 8 reactors, it's not 7 million pounds a year, for sure. But it's something, and once you factor in that accounts for some of the strategic inventory, some of the initial core that will be needed, it goes a long way to quickly eating up some of the available supply that would go towards other future growth should it have not happened. With that said, as I have spoken to before, there are a number of other places that seem to be turning towards nuclear, and a number of other small 1 or 2 or a few reactors here and there, and some of them will be starting to be constructed this upcoming year. So one of the main cautions I would give towards those who wanted to look at plans and forecast what growth is actually going to be. Personally, I don't count on anything being built that's not being built, because even looking at the last few things, looking at what China plans to do, I don't count on it. I don't invest based on guaranteeing that it happens until it starts. Even things that I think are highly likely. If you want to see why, well, if you spend a few years in the sector, you'll probably have a good idea. But basically, there's so much planned, there's so much proposed, and very little of that actually goes towards being built on time, at least. Now, some of it will arrive at some point, and that will be demand, but there's so much more planned and proposed than what actually comes to be, that it doesn't really help thinking that everything will come to be, because if even most of it came in approximately the right time frame, there would be some squeeze. I don't really know what other way to say it, but the supply is not set up for much of that demand coming online. Now, the fact that there is so much planned, proposed, and whatever, reactors, that is the story that many of the miners will all often kind of focus on, because if they do come to be, well, then all of the miners are going to be needed. But how many of them? It's really unclear. And so there's always a supply squeeze right around the corner. And the most interesting part, and why I'm mentioning this, is, miners will talk about why this will happen. The bulls will talk about why this will happen. And to be honest, some of it probably will. Will enough of it, or will all of it? No, or all of it, no. Will enough? Maybe. No one knows. So when you're looking at the narrative and you're looking at this market, the reality is it's very hard to guess or judge approximately what will happen, because there are so many unknowns and so many things that are beyond people's control. So what I'm wondering, if only from an academic standpoint, I mean, obviously I'm highly invested, but I'm really interested in knowing in the end, when the price moves, which I believe it's a when the price of uranium is moving, will people start thinking that the narrative is happening? Because it looks like it is. It'll look like it is when the price moving. And I'm just wondering if this will become the mother of all confirmation biases. That is to say, price is moving, so demand must be going up faster than the market is ready for. And so I don't know how much, if there's going to be less due diligence in that type of environment, as you can maybe see in some other places, when it looks like people are being right. If everyone's thinking they're investing, price is going up, that means they're right. What happens next? And so I'm just very curious if the story will reinforce itself. And I don't know, but it's something that at the very least could happen, and I wonder what the implications might be if it does. So one interesting point is that for next year, there's less reasons for things, for price, for contracting not to happen than there were in the past few years. Now this is because Section 232, that extension, that follow-up, that policy debate thing is gone. So if that was a holdup to some contracting decisions, that's over. Suivant next. RSA, Russian Suspension Agreement. The things related to that and the uncertainty with regards to where can utilities contract, that's gone too. So contracting is something that should happen in the background and is more and more likely to happen, and at an accelerated pace, because the other thing, the less reasons not to, is that there are less pounds in assorted inventories. So the sense of urgency should be increasing. It shouldn't be, oh my God, we need to contract now, but it should be increasing, and at the same time, there's less excuses to not contract. The thing is, every time I make a video like this, I seem to get the same type of questions. Can it last another year? How much longer can it last? And the answer is always, it really depends. But in this instance, I'm going to look at the question of, can it last another year? I will say at this point, I'm very skeptical. I shy away from strong language and definitive things, and you'll see more non-definitive language in this slide. Can it take 6 more months? I don't know. If it does, I think there's a lot of implications further on in the cycle, and supply will have more difficulty catching up, because this whole thing in these past few years, it's been an inventory question. How much will utilities allow themselves to draw down inventory? Where will they allow themselves to get to before they're really concerned and need to contract at least enough for the inventories to not decline at an alarming pace? Now, the reason why now it begins to look, can it really take much longer? And it can, if the utilities decide to really draw down inventory. But you look at this next year and you say, okay, well, what's going to be removed from that inventory? And I would say maybe 20 plus million pounds. So it was 20 million pounds plus any additional disruption that continues. Okay. And then the next 2 years, which remember, this upcoming year sets the production almost for the 2 years after that. I mean, at least the 1 year after that. And the drawdown in inventory due to deficit or whatever you want to call it, it accelerates to 30 plus million pounds over the next 2 years. Again, it depends how you measure. So we'd already be talking about 2006 levels of inventory after this year, or levels of above ground uranium, not necessarily exactly inventory. And then we'd be facing a deficit of maybe 65 million pounds over the 2 years after that. So it becomes, from right now, it's like, okay, there's no reason to hurry. I mean, I could argue. To 1 more year, it becomes, uh-oh, things are starting to look somewhere between problematic and quite problematic. So 3 months, who knows? Who knows? Anything can happen. 3 months, you know, it's a bunch of decisions, who knows? 6 months. At this point, I would say probably not. 12 months, so 1 more year, I would say quite unlikely. And if you're looking out 2 years without some major shift in the whole sector, can we get 2 more years without the price moving significantly? I think that's almost impossible. I don't see it. Now for clarity, because there's all sorts of people out there with all sorts of expectations and thoughts on what might happen in uranium. I never promise life-changing games. I never really suggest them either. And I believe that that's because at this point you can't. There's too many uncertainties. You can't know what's going to happen in the sector and what the market's going to be thinking at a particular point. So thinking about that, I don't think is necessarily helpful. And I don't know what this cycle is going to be. I don't know if the price goes to 150 bucks or if it doesn't hit 100 or higher or lower. Again, there's some good money that could be made with the prices sustained at $70 for many years. There's a different type of cycle that you would play if the price was going to 150. It's a different thing. It's a different way to play it. And so while I'm not predicting that everything happens this year, I don't think that the price will be, I don't think it's going to the peak by the end of this upcoming year. While that is possible, I think it's unlikely. What I'm saying that what I'm talking about when I'm saying is it possible for whatever, is will the price move to a point that it will start the dominoes falling? It'll get the ball rolling towards who's restarting and who's, finally making money and the whole bunch of things that means along the lines. And so that's what I'm saying is probably going to happen this year, few months, a year, who knows? The other thing that has become quite topical recently is Yellowcake and their option. So for those of you who don't know, Yellowcake is one of 2 currently existing publicly traded uranium funds. They hold physical uranium. The thing about Yellowcake is recently they've become squeezed in a tricky position. So they're getting squeezed between their NAV, the premium to their NAV, and the clock. So let me explain. At the end of 2020, they have an option for the 2020 variant of their option expires. So they would need to exercise it between now and the end of the year. So it doesn't leave them much time left. So all year up until now, they haven't had a chance to exercise it because they've been trading at a discount to NAV, and which basically means that money is more expensive for them than it would be for Joe on the street to start a fund and buy and do the same thing. So the market has been telling them, don't do it, even though they have an option. Market saying, don't do it. So they haven't. But now they trade at a 2% premium to NAV. So in theory, this makes money cheaper for them than the Joe on the street who's starting a physical uranium fund. Except that it's a bit more complicated than that, because when you're raising money, you can't necessarily do it for free. There's fees, and so a 2% premium might actually not be enough. So in the end, it might end up losing them money if they were to do it with only a 2% premium. Now, I'm going to combine two things here by not completely explaining the process, but saying that given the clarity I've seen on the process, this is what I think they should do. So I believe that they should and are allowed to inform Kazatomprom, because that's who they'd be buying from. That's who their option allows them to buy from. I think they should inform them that they intend on exercising the option pending capital availability. This is part of the process that they must do anyway. So then, between that time and the time that the payment is needed, a few things must happen. Kazatomprom tells them what it's going to cost exactly, whatever, and then they raise the money. So what I would do if I were management in the cover your backside category is, after I informed Kazatomprom that I intended to exercise the option, I would say, I'd issue a news release to the market and say, this is what we've done, and pending capital availability. And I would highlight the heck out of this and say, if the market allows us to have the capital, we will do it. So that way, either the market will give them a bit more of a premium to NAV and allow them to profitably do it, as many enthusiasts are suggesting they should, or they would fail anyway. So, okay, let's say the premium goes to 5%. That's the market's way of saying, do it. Okay, then they do it. They make money, shareholders happy, everything good. But if they issue this release and then their premium falls to below NAV, it is a clear way of signaling, of the market signaling, don't do it, or we don't want to take this risk. So I think that that is the best way and the most clear way of the management sending a message and the market answering the message. And a lot of people are very, very excited or anxious for Kazatomprom, or sorry, for Yellowcake to make this purchase. But other people, well, there's other sides, frankly. So there's a few footnotes, if you will, to the proposition here that I think are relevant and people should think about, as opposed to thinking they need to necessarily push now, exercise at any cost. And that is, they have another option that starts in a week, less than a week. I mean, it's 2021. So if the one expires for 2020, that's not great, but they have another one next year. And so they could easily do the same thing in a week. They could do it twice, but that's another issue. So the point is, upsetting shareholders is probably not the greatest thing to do, because if you upset them now doing the wrong thing, then they may basically never forgive you and never give you the chance to do it again, and you have many more than one more option. So that's not a good idea. The other thing is, there's nothing stopping them. Like, if your shareholders are super happy, look at Grayscale Bitcoin Investment Trust, or whatever, I'm not sure what the name is, but they've had a premium for a long time. And Yellowcake and Uranium Participation Corp, really, if they keep a premium, there's nothing stopping them from issuing shares to buy from the spot market. They could do more than exercise the option if the shareholders are very happy. And if the market keeps saying buy more, they do it, and they add value along the way. And so some people might say, okay, but what if the pounds aren't there on the spot market? Well, I mean, personally, I don't think that the funds would have a problem with bidding in the spot market, bidding a higher price, and pushing up their net asset values along the way. I don't think they'd have a huge problem with that. I don't think their shareholders would necessarily have a problem with that. But, it's not the professional way of going about it. But I don't think that anyone in that scenario has a problem. The other thing is, even though they're exercising this option, and yes, it is different for them, but for the market, and the reason why a lot of uranium bulls, even if they don't own Yellowcake, think that they should exercise this option, is because they're buying from Kazatomprom. That's just what the option is. Kazatomprom is already trying to catch up for some production disruption via the spot market. So what a lot of people understand here is that them exercising this option will not be them buying in the spot market, but will be Kazatomprom buying more in the spot market. So in the end, it eventually all translates back to spot market buying. How much is left in the spot market? Well, there's a debate, but let's just say less is probably better in many cases for bulls. So I think that's just about all I want to say for today and part 3. I think it's probably going to be an interesting next 12 months, but remember, this is a multi-year cycle, and there's many reasons why it historically has been and probably will continue to be a longer cycle than some other things. Sentiment may be shifting a little bit. There's a few signs that people may be taking another look at uranium. Maybe that's due to price action, maybe it's due to many other things. The one thing I will say is be careful. And I'm not saying that I know everything. I absolutely do not. I'm not saying that anyone else has something right or wrong. I'm just saying there's a lot of information out there about the sector, and there's a lot of wrong information out there about the sector. So be sure to check multiple sources and do the research for yourself. Look for yourself, think for yourself, and don't necessarily think that I or anyone else has the answers for you, because we don't, they don't, maybe they do, I don't know, I don't. Anyway, I hope you enjoyed, and until next time, have a great day.